Okay, so are you ready to dive into some serious number crunching? We've got Bandhan Bank's latest earnings report here, and well, it's a bit of a mixed bag, isn't it?
Absolutely. It's always fascinating to see how these financial results unfold. Bandhan Bank, as we know, started as a microfinance institution and then transformed into a full-fledged bank. I guess their a model is about bridging that financial inclusion gap, right?
Yeah, exactly. They're all about serving the underserved, especially in semi-urban and rural areas. And they've got quite a reach. I mean, with nearly 6,300 outlets across 35 states and union territories, it's kind of mind-blowing, actually.
It really is. So the report highlights that their 9-month profit after tax, or PAT, is up by 12% year on year, reaching about 2,427 crore rupees. That sounds like a decent growth.
Well, it does. It does. But when we look at the quarter, things get a little less rosy. I mean, the profit after tax for Q3 FY25 actually saw a degrowth of 42% compared to last year. What's up with that?
Well, that's where the story gets interesting, you see. Their net revenue grew by 28% in Q3, but their net interest income, or NII, only grew by 12%. This means their costs are increasing faster than their revenues. It's like, imagine your lemonade stand suddenly having to pay triple for lemons.
Okay, yeah, that makes sense. So expenses are catching up. And it also says that their provisions for bad loans, those are up quite a bit, right? This
Precisely, those provisions increased from 684 crore in Q3 FY24 to 1,376 crore in Q3 FY25. So they are putting aside more money to cover potential loan defaults. And that's impacting their bottom line, I guess.
right, and we also have to look at their asset quality because that is quite crucial for banks, right? I mean, what about those NPAs or non-performing assets?
Yes, their gross NPA is down to 4.7% from 7.0% last year, which is great. And their net NPA is also down to 1.3%. It seems like they are doing some serious cleaning up of their loan books, which is good.
Okay, that is definitely good news. So they're becoming more efficient in managing bad debts?
Exactly. It's like they're learning to trim the fat and be more disciplined with their lending. But it's interesting. They've also seen a big growth in secured loans.
Oh, yeah, secured loans up 34% year-over-year. So what does this mean?
Well, it's a move towards less risky lending. Secured loans, like those backed by property or other assets, are less likely to become bad debts. It's like choosing to invest in a solid bond rather than a highly volatile stock.
Okay, got it. So they're shifting from those riskier microloans to more secure options, which is a smart move. Now, what about their deposit growth? That's also the key indicator, right?
Absolutely, and their deposits have grown 20% year on year, reaching a total of 1.41 lakh crore. That's a healthy growth, showing that people have faith in the bank, well, mostly.
That's pretty impressive. I mean, that's a huge amount of money. But what's the deal with their CASA ratio? I always get confused with that.
CASA stands for current account and savings account. It basically shows how much money they have in low cost accounts. A higher CASA ratio means they have access to cheaper funding. Their CASA ratio is at 32%, which is good. And combined with retail term deposits, it makes up about 69% of their total deposits.
Okay, that makes sense. So they've got a good chunk of low-cost funds. It's like having a well-stocked pantry for a restaurant, I guess.
Ah, exactly. Now let's talk about something really interesting, their digital presence. Apparently, their digital registrations grew by 29%, and a huge 98% of retail transactions are happening digitally.
Wow, that's a huge leap. I guess that means more convenience for customers and probably lower operational costs for the bank, right?
Exactly. It's all about efficiency. They are pushing towards a more digital future, which can increase their reach and reduce reliance on brick and mortar branches. It's like setting up a delivery service alongside your traditional storefront.
Okay, well, that's super interesting. So overall, it sounds like Bandhan Bank is seeing growth in many areas, but they're also facing some challenges with rising costs and provisions.
That's a great summary. Their net revenue and operating profit are up, but the increased provisions for bad loans are impacting the bottom line. It's a bit like running a marathon where you are leading, but you hit a steep hill in the final few miles, you see.
Right. I mean, they're running uphill, but still moving forward, slowly perhaps. What about the key financial ratios, like ROA and ROE?
Sure, their return on assets or ROA stands at 1.8%, and their return on equity or ROE is at 13.8% for the 9 months. However, the quarterly numbers are lower, which reflects that drop in net profit we talked about.
Okay, so a bit of a dip there. And well, one thing that also stands out is the credit rating they've received. What are they and why are they important?
Credit ratings are essentially report cards for banks' financial health. Bandhan Bank has received ratings from agencies like CRISIL and ICRA for its various financial instruments, ranging from AA- to A1+. These ratings help investors assess the risk before investing.
So they're like a seal of approval that gives investors more confidence, I see. It's like a restaurant getting a good review from a popular food critic.
Yeah, exactly. And I guess all these numbers are being carefully monitored by investors and analysts. It's fascinating to see how all these pieces of the puzzle fit together, right?
It is indeed. It's like watching a really complicated recipe come to life. So, what's your overall take on this? I mean, what do you think about their future outlook?
Well, I think they have a solid base for growth with that impressive deposit base and the focus on secured loans and digital channels. But they definitely need to keep a close eye on expenses and asset quality, I guess. It's all about balance for them now.
I agree. They've shown a willingness to adapt, like shifting towards more secure loans. So, they are on a right path. It's like they're building a ship while sailing it.
Ha ha ha, that's a good analogy. But, all these numbers and projections come with a note of caution, right? Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Absolutely. It's always smart to be careful and do your research before putting your money anywhere. So, any other thoughts before we wrap up?
Well, just that the bank seems to be in a phase of evolution, trying to navigate this growth while maintaining asset quality. It's like they're transitioning from one chapter to the next.
Okay, that's a really good way to put it. It seems like they're building Bandhan Bank 2.0, as their CEO mentioned, I guess.
Exactly. Now, before we completely wrap up, if you liked this deep dive into Bandhan Bank's performance, why don't you like, share, and subscribe to our YouTube channel?
Yes, please do. We love exploring these kinds of financial stories, and we would love to hear your feedback too. So, until next time, what do you think will be the biggest challenge for Bandhan Bank in the coming quarters?
That's a great question to ponder. It's something we'll certainly keep an eye on. And, well, we look forward to discussing more next time, right?
Sounds great.